In this video, we're going to go over Robinhood Stock, compare it to other fintech companies, and some legacy banks. But before we do, please smash the like button and subscribe. Currently, the stock is trading at $12.45 a share, up 54% year to date. It has a $11 billion market cap, and it's trading currently around its 52-week high. The stock's 52-week low is $7.56, so it has come up significantly from the 52-week low. That said, the stock is down over 77% from its highs 2 years ago. So although the stock has come up recently, it is still significantly down in the grand scheme of things. So let's start to go over their first quarter report, which was about 3 months ago, and we're expecting their next quarter report, Q2, to come out next month. So in the last quarter, the first quarter of the year, their total net revenues were $441 million. This was an increase from $299 million in Q1 2022. So year over year, it was a nice increase in revenue. And when it comes to OPEX, they actually decreased year over year from $470 million in operating expenses in Q1 of 22 to $352 million in OPEX this quarter. And what that tells me is they're becoming more efficient because they're spending less and they're still increasing their revenues. When it comes to adjusted EBITDA, they went from a loss of $143 million in adjusted EBITDA to a positive $115 million this quarter, so year over year, which is a great sign for their future to get into profitability down the road on a GAAP basis, because currently they're still not profitable on a GAAP basis, only profitable on an adjusted EBITDA basis. Now on some operational results, they showed that their net cumulative funded accounts is 23.1 million. That was an additional 120,000 accounts quarter over quarter. As far as their monthly active users, it's now 11.8 million. That's up 400,000 monthly active users quarter over quarter. As far as their assets under custody, it's at 78 billion, up 26% quarter over quarter. Net deposits at 4.4 billion, which is up 29%. The revenue that we spoke about before, 441 million, is up 16% quarter over quarter, rather than just looking at the year over year. The adjusted EBITDA of 115 million is up 40% quarter over quarter. The GAAP net loss is down 511 million, so they are losing money still on a GAAP basis, and the earnings per share being negative 57 cents a share. So this company still has to execute to get itself into a profitable situation going forward. Now, they show that they continue to deliver on an aggressive roadmap. This is a timeline showing all different types of features they've added to their products, so they continue to innovate. They had the cash card earlier, March 2022, and they're doing things like increasing yields as interest went up, so higher yields on the cash sweep program. If you're a gold member, 4.4% in March 2022. Now I believe it's even slightly higher than that. The Robinhood wallet became available to iOS customers globally on March 1st. And if you just look across this graph here, you'll see that there's a lot of things they've innovated on that other fintech and legacy banks are just not doing. Things like fully paid stock lending on May 4th in 2022. That's a prime example of them thinking out of the box and trying to offer and create products that you just don't find typically on other platforms. Now, they plan to continue to deliver throughout 2023. Some of their roadmap includes deepening their relationships with retirement, gold, and advisory. For active traders, they introduced stock screeners, the 24-hour market, which I think is extremely important, we'll get into later, futures, and some new growth opportunities, including Robinhood Connect, Robinhood Wallet, and the expansion into the UK, which is obviously an extremely important part of the business to expand beyond the US and eventually become a dominant player globally. In their report, they show a few different charts just to get an idea over time how things are looking. For example, the net cumulative funded accounts that increased 120,000 in Q1, and we have seen a slow but steady increase quarter over quarter. We've seen 90,000 in Q2 of 2022, 60,000 additional in Q3, 50,000 in Q4. So the numbers were starting to come down as far as additional users, but it's picked back up to now going to 120,000 in Q1 of 23. So it'll be interesting to see how many additional accounts we could see in Q2 in the first week of August. Now, when it comes to monthly active users, not everyone who's holding stocks trades or uses their app every single month. So there's going to be some people who are just holding stock for the long run and don't really open the app month to month. That said, we do want to see people using this app on a monthly basis, because the more products they have in it, the more you're using it, the more trading you're doing, the more money Robinhood will make. So it was a little concerning quarter over quarter as the monthly active users were dropping from their total cumulative accounts in around Q2 of 2021, everyone using their app, to slowly less of a percentage of all total accounts that have signed up using it, going from 17 million to 15 to 14 to 12. And in Q4, we saw 11.4 million, another decrease. So finally in Q1, it going up to 11.8 million, a 400,000 increase, is showing that the monthly active users is now finally breaking that trend and starting to increase. And hopefully if we see Q2 more monthly active users, that would be encouraging for the long-term story of Robinhood. Now, as far as assets under custody, they increased 26% to $78 billion, primarily due to higher valuations of growth stocks and continued net deposits. So people were depositing money into their accounts, and also stocks that people were holding have went up, so accounts overall are larger than they were a quarter ago. So we did see 62 billion in assets in Q4, and now it's 78 billion. Now, it is important to know that the vast majority of these assets are in equities, 55 billion of the 78 billion, only 12 billion in crypto, 11 billion in cash, and a minimal amount in options. Now, seeing this number go up, asset under custody, is good for Robinhood Stock, because they make money from transactions, and the more money that is flowing through their system, the better for the company, as well as they're able to offer more margin out, and that's more interest that they can earn. And there's a lot of different benefits to having, obviously, more assets under custody. Now, the average revenue per user, the ARPU, has increased as well to $77. This is up 16% sequentially. We know quarter four was $66. It was $63 before that, $56 before that, $53 before that. So we did have it declining from Q1 2021 to Q4, or Q1 actually 2022. But since then, there's been a steady increase in ARPU, which is really good that they're continuing that ARPU going up. So they are making more money from their users quarter over quarter. And we'll see in Q2 how that trend continues, hopefully. We all know that interest has been going up significantly, and that has helped Robinhood in their revenue department when it comes to interest. Their net interest revenue is $208 million in Q1. This is up 25% sequentially, and they show a breakdown of where that interest is coming between the cash sweep program, margin interest, etc. We also can see how the company is becoming more efficient over time, quarter over quarter, because their operating expenses, this is prior to share-based compensation, has decreased quarter over quarter. So it was at $470 million in Q1 of 2022, and it's now down to $352 million in Q1 of 2023. So we have seen a decreased operating expenses while the revenue is increasing, so they're becoming more efficient. And they're not just being more efficient as in a lower percentage of revenue going towards OPEX, it's a lower actual dollar amount being spent on OPEX. So it is an impressive stunt to do that while increasing revenue. Robinhood recently announced that they acquired the credit card startup X1 for $95 million. Now, this is basically good news because they'll be able to implement credit cards to its users. They already have a cash card, and credit cards have extremely high interest rates. In my opinion, no one should keep any debt sitting on a credit card if possible. That said, many people just pay the minimum and rack up these interest payments. So it is beneficial to Robinhood to offer a credit card. I think this acquisition will be able to help them do that. Robinhood knows its customers as well and has tons of data on them. They know how much cash, stocks, crypto someone's holding, and they'll be able to use that insight to offer a certain credit limit and know how risky the credit is with each user as they offer these limits. So there is a lot of synergy with this acquisition, and it just makes sense. I think it's a good overall acquisition for them. Also, X1 has some really cool features that I could see Robinhood implementing, things like free trial cards, single-use credit cards. They just have some interesting stuff with virtual credit cards and benefits, and it seems like a high-tech team that will blend well with the Robinhood team, as a lot of those members now join the Robinhood company. Also, Robinhood introduced the 24-hour market. I think this is a great feature, something that should have existed a long time ago. We already know crypto is tradable 24 hours a day. There's no reason stocks shouldn't be open to be bought, sold between users 24/7 as well. Robinhood clearly changed the industry when they did no-fee trading. It took a while, but eventually everyone started to follow suit, and all basically brokerage platforms now offer free trading where they never did before Robinhood. And I think they're going to do that again with now 24/7 trading. Robinhood is the first to do this, and I think that other brokerages will take their time before introducing it, but I think eventually will also introduce it. And in the meantime, until they do, this is another reason to use Robinhood over any other brokerage. It's a benefit to Robinhood users, and puts Robinhood in a good place against their competitors. Now, obviously, volume is very low because you're only trading between other people probably within that Robinhood community right now, and it's only for certain stocks and ETFs. But that said, it will clearly expand over time, and I think it's a great feature to be added. Now, Robinhood does not have GAAP net income yet, so it's impossible to value it today on a multiple of actual earnings on a GAAP basis since they're not profitable. And it's difficult to predict future earnings with accuracy for companies like Robinhood. It's really dependent on their new product offerings, the way they monetize, the suite of offerings they have, and the future user base. If the monthly active users continue to grow, how large it eventually gets, and how much ARPU they can make from those users and where they can get their costs. So there's a lot that goes into these models, and it's extremely hard to accurately predict how much earnings they'll actually make in a 5 or 10 year time frame. So instead, if we just take a step back and ask some questions like, do people like the product? Are they innovating? Does the competition have a better product? What's the opportunity? How large are their current competitors? And lastly, are they an M&A target? Would other companies benefit from acquiring Robinhood? For the first few questions, I believe people do like the product. I do think that they are innovating. They obviously are introducing features that other people are just not even thinking about, like 24-hour market. Their user interface, in my opinion, is light years better than a lot of user interfaces out there, especially from legacy banking companies. I don't believe the competition have a better product when it comes to the things that Robinhood currently offers. And as far as the opportunity, it's really the entire financial industry that is their opportunity. So let's look at some of the market caps of other fintech companies in comparison to Robinhood today. We know Robinhood is $11 billion. Square, which is no longer Square actually, it's Block, ticker SQ, is $46 billion. Coinbase, $25 billion. And we have Social Finance at $9 billion. So Robinhood is trading similar to Social Finance. I've used all four of these apps. Cash App from Block, obviously the Coinbase app, the SoFi app, and the Robinhood app. Personally, I think the Robinhood app has the best UI of all of these companies. Each company has their own respective businesses and different things that they're doing, but they're all fintech players. Obviously, Robinhood is trading closer to SoFi's market cap than Coins or Square's, or Block, I should say. But the real difference in market cap comes when you start to look at what legacy banking looks like in comparison to Robinhood or any of fintech. Robinhood is sitting, like we said, at $11 billion. Then you have companies like Bank of America, $236 billion market cap. JP Morgan, $435 billion. Wells Fargo, $164 billion. Robinhood could literally 10x and still be far off from a Wells Fargo. Now, I'm not saying that these other legacy banks don't deserve those market caps. They actually trade quite cheap for the most part and a multiple of the earnings they make. They make plenty of money and they trade at market caps based on multiples of those earnings. And we probably won't see Robinhood making the types of earnings that these banks make for a very, very long time, if ever. But the purpose to show this all is to show they're in the same industry and what the long-term opportunity is for these fintech companies and Robinhood in particular. Now let's talk about M&A. Fintech is just a drop in the bucket amongst most of these legacy banks, yet it's threatening their future. A traditional bank that may not want to lose to some high-tech fintech company over the long term would be smart to possibly acquire Robinhood. I don't know about you, but if I was running Bank of America or Citibank or PNC or one of these banking companies that their apps are not that user-friendly, they're not that great, acquiring Robinhood would be a cheap way to secure your future amongst these fintech players, to get great access to software engineers, and to make sure that you have a young, user-friendly app that is more popular with the younger crowd as they get older and do business with you. Robinhood also is a good acquisition target for a lot of big tech. Companies like Apple and Google have their foot in the door, with banking like Apple Pay, Google Pay, Apple Card, the Apple Cash Card, the credit card. So acquiring Robinhood would be a cheap acquisition for a lot of big tech companies and put them immediately in one of the leading positions in the fintech world. I even think a company like Meta that has shown interest in the payments across messaging apps, crypto, they were working on the Libra. I think they'd be a good person to acquire Robinhood because they could even introduce something that many other companies couldn't, which is a social aspect to the app. We know that SoFi and Public really do well with the social part of investing, and Meta could obviously bring that to the table. Now, when it comes to what other analysts are saying about this stock, they currently have an average price target of $12, so kind of around where the stock is right now over the next 12 months. Out of the 10 ratings on tip ranks, 2 are buys, 3 are sells, and 5 are holds. So analysts are just kind of unsure of what to think of Robinhood stock at today's price and over the next 12 months. Investing over the long run is a different story, but over the short run, give it 12 months or so, analysts are really unsure, with more sells than buys to be frank, and most holds. So if you're willing to take a bet on the future of fintech and the Robinhood team, the stock could be for you. But if you don't want the risk of a non-profitable, unproven fintech play, then you should probably stay away. I think it has the potential to be a massive winner over a very long time horizon, but I'm not in any rush to build a large position. I own a small stake and I plan to hold it for the long run, much more than 12 months. So either I'll make a lot of money in that over the long run, or I'll lose a lot if they don't work out. But I'm only willing to invest what you're willing to lose in a company like this, where it's not profitable yet. We will see the progress made in less than a month from now for Q2 of 2023. And when they report that earnings, we can reassess their position and how things are going for the future. And quarter by quarter, every 3 months, we can continue to track the progress and see if the management is executing on long-term ambitions. Thank you for watching. Are you invested in Robinhood stock? Comment below. Let me know what you think of the stock. Make sure to like this video if you haven't liked it yet, and subscribe to the channel.